In this video, we are going to learn how to take entries, stop losses, and take profits in the context of supply and demand trading. So grab your notebooks, hit that like button, and let's get started. Before we delve into entries, let's quickly review what a supply and demand zone is. These are key areas on a price chart where buying or selling interest is concentrated. I'm not going to get into too much detail here, but if you want, after this video, make sure to check out my video on how to properly identify supply and demand zones to make sure you're trading at the correct areas. Now that we've covered the basics of supply and demand zones, let's talk about effective entry strategies. The most typical way to enter a supply and demand zone is to simply wait for a retest of that zone. So once we know that the zone has been confirmed to be a zone, we then draw the zone and then we place our limit buy order or limit sell order if you are shorting. And if your broker is connected to TradingView, you can actually use the risk to reward tool and wrap it around the supply and demand zone with a take profit and stop loss, and simply just right click and create limit order right on TradingView. Now, there are many different ways to refine this type of entry. As you're looking at the screen right now, you can see we have entry 1, which is your typical entry, but we also have entry 2 here. And you can clearly see we did not push down and hit entry 2 here. But if we did, what that would do is simply create a larger risk to reward if you split up both positions 50% each. But the pros and cons of that are, obviously the pros are we get a larger risk to reward, which equals more profit. But the cons of that are, just like you see on the screen, sometimes you're not going to get filled and only half of your position is there. Based off of all of my winning trade video from 2023 that I posted about 2 months ago, but 47% of them went to entry 2. So that's pretty significant. That is almost half of the winning trades went to entry 2. So I think it might be worth looking into something like that. Or, maybe you want to only do entry 2. Maybe you don't want to, risk not getting filled and you only want to do entry 1. It's something that you are going to have to test out yourself, because I'm only here to explain what I personally do and things that I know, and then you should be taking what I'm telling you and test it yourself to see what works best for you and for your psychology. And as far as trading strategies go with supply and demand trading, there are basically 2 types of entries. We have our confirmation entry and then our set and forget entry. I'm not going to go into detail on any of these entries in this video, but after this video, I encourage you guys to at least check out my trading tips playlist and these 2 videos where I go over confirmation trading and set and forget trading, so you can learn exactly what I am looking for, so we can keep this video somewhat short. Now we are going to talk about where to put your stop loss regarding supply and demand trading. So typically you want to put your stop loss just right underneath the zone. Now you want to make sure you do add a little bit of space between the distal line of your zone and where your stop loss just gives room for the spread, just in case price does come down to the almost close to the end of the zone, and it gives you a little bit of space in between there so that you do not get stopped out if the zone is not broken. That's why I like to give it a little bit of wiggle room. Now, some people, they like to have a stop loss under the low. Depending on where the zone is located, a lot of times there will be a low of price just under or above your demand or supply zone, and a lot of traders like to have it underneath that low instead of underneath the zone, and that is fine. It essentially makes the trade more safe because you essentially give it more wiggle room. But remember, there are no solutions, there are only trade-offs, as made famous by Thomas Sowell. And if you guys want to get my daily chart analysis along with my daily market breakdown videos with Sunday Zoom sessions, video lessons, and much more, check out the Diamond membership. Links are in the description down below. We'd be happy to see all serious traders join the team and level up your trading. So check it out. Links are in the description down below. So with the stop loss under the low, in this situation, the risk to reward is 4-1, and that's really, really good. But that is half as much profit as the previous slide that I showed, where the stop loss was under the zone and the total risk to reward was actually 8-1. So it's okay if you want to have a wider stop loss, but remember, it just means that you're going to have less profit. But yes, it is less risky. So it's all going to have to depend on how you deal with things emotionally and if you can handle having more risk with a tighter stop loss. All right, now we are going to talk about take profits. This is arguably one of the most difficult parts of trading and just trading in general, not even just supply and demand. I get a lot of questions all the time. Where do I take profit at? How do I take profit? Well, hopefully this will give you guys some ideas. So one of the first ways, probably the most popular way, is to have multiple take profits at opposing zones. Now remember, for supply, you would just take profit at opposing demands. But for this example, we are taking a demand zone trade and we are simply having 3 take profits at 3 opposing supply zones. You can see on the chart, I have my 3 clear opposing supply zones, and you can see the second one, the middle supply zone, was actually tested almost 3 times. So you can see that was a very clear spot to at least take 75% of your position off of the table. Now if you want to target the highs, we will talk about that in the next slide, but this is just one typical example of taking profits at opposing supply zones before they can react off of them. Another way of using your take profit, this is actually what I do a lot of the times, is I just simply look for a risk to reward take profit. So I typically will look for a 5-to-1 take profit. Will I settle for a 4-to-1? Absolutely. If there's a supply zone, a significant zone like that middle zone I showed in the last slide, right before my 5-to-1 take profit, then I might adjust it just a little bit lower for that supply zone. But typically, I will just put it at about 5-to-1, and sometimes I will trail it. It really all depends on the multiple time frame analysis that I am doing. If you guys are not using multiple time frame analysis, it is extremely important in finding targets. So, like I said, I will use this method a lot, but be careful. Sometimes you will run into opposing supply zones, but it's just something you are going to have to kind of ignore if you are going to use the risk reward take profit method. Now, why I like this method is because it just kind of makes it more simple. It's just, okay, I'm looking to trade here. My take profit is at 5-to-1. Let's let the trade play out. And typically, why I ignore the opposing zones is because usually I am entering at a higher time frame demand zone. So in this example, this is a 5-minute chart of the Euro US dollar. The higher time frame for the Euro US dollar would be the 1-hour chart. So you can do this with any time frames. Let's say you're entering on the 1-hour chart, your higher time frame will be the daily chart. So typically I'm trading inside of my higher time frame zones. So for me personally, I trade at daily zones usually, and I enter on a 1-hour chart, my entry time frame. So what that means is that my daily zone that I'm trading at is definitely stronger than any 1-hour supply zone that I'm going against. Now, it doesn't always equal that. Sometimes the 1-hour supply zones will hold and they will break the daily zone that I am trading at, but sometimes that's because my analysis was wrong. Yes, I do make mistakes. So I like this method of trading. It works really well when you are trading at higher time frame areas, because higher time frames always, not always, but typically negate the lower time frames and are much, much stronger. I would not really put my money on a 5-minute demand zone breaking like a daily supply zone, if you guys are understanding what I'm saying. Now, this is the structure take profit method, and what I mean by that is people like to take profit at the high of price. Now, I will do this sometimes for my swing trades when I'm letting my runners run, like maybe I let 25% of my position run, and I'm trying to target the high of price, like the peak. So that's what this is. This is structure take profit. But remember, when you're going for a larger risk reward like this, it is smart to at least move your stop loss to break even after price moves a decent distance from your zone. So you can see on the chart here, at this point, my stop loss definitely would have been at least at break even, because price went 5-to-1. You might as well have your stop at break even at that point. And you can see that little red line below. That's actually where I probably would have had my stop loss, well underneath that little rally-based rally demand zone there. And you can see it was very well respected. So in the next slide, we're going to talk about where to bump your stop losses under for more of that trailing your stop loss, take profit kind of thing. But this is what a lot of people do. I don't do this a lot. This is something that I see online a lot, where people are targeting the high of price. And look, it looks great. You get a large risk reward a lot of the times, and that's fantastic. But remember, guys, when you're looking for those large risk rewards, obviously the risk becomes greater and it's difficult to achieve those. Obviously, it's going to be easier to achieve a 1-to-1 move than a 9-to-1 move if you're targeting the high of price. So remember, it's important to at least bump your stop losses, lock in profit, at least lock in break even if you want to, minimize your risk when looking for these large take profits at structure highs. All right, and the last method of taking profit is the trailing stop loss placement adjusted method. So what you do here, well, typically after like a 2-to-1 move, I would at least put my stop loss to break even or half risk at this point. And you can see every red line you see is where I would have put my stop loss. Now, obviously this worked out very, very well. I'm not going to pretend like this happens all the time, like a lot of the other traders would do on their videos. Obviously at any point, price could have came back and hit your red line, your stop loss, and taken off without you. And yes, you would have made some money, but you wouldn't have made the whole take profit, right? So what you want to do in this situation is give it some wiggle room. I don't really agree with people that are moving their stop losses right away. I like to at least see price create some zones along the way. So whether that's a 4-to-1 move with some zones created, as you can see here, we went 5-to-1 and we created a couple zones. So you can see where my stop losses would have been underneath the first little rally-based rally. Then there was another rally-based rally there, and then there was just some price action would have put under that low. And then as you start to get towards that structure take profit, like that high of price we were just talking about, then you can start to get a little bit more aggressive with adjusting your stop loss, right? That's what I like to do. As I get closer to where I would have put my take profit, I then get really, really aggressive with my stop loss. And as you can see, it was actually hit at that one point. So that's what I like to do as I get closer to where I'm looking to take profit, where I think price will actually turn around. So this is one good method. And what you could also do is, let's say price moved 5-to-1 like it did here. Let's say you only wanted to take 75% off at that point, and then those red line stop losses, maybe that's your little 25% runner that you left on to try to maximize your take profit. So there's so many things you can do with take profit, and I encourage you guys to test things out yourself. Do not listen to what I am saying. Listen to what I'm saying, but apply it and practice it and see what works best for you and for your emotions. Everybody is different. If you guys have any questions about the video, leave them in the comments down below, and make sure to subscribe so you can watch my weekly Forex forecasts that are released every Saturday to get you prepared for your trading week. Take care, guys, and I'll see you in the next one.